Bismillahirrahmanirrahim. Assalamu alaikum. Viewers, you are welcome to my YouTube channel, Finance Specialist. Viewers, in this video, I will talk about forms of business organizations. Viewers, it is very important for an individual, especially for business students or business graduates, to know the different forms of business organizations according to their needs and goals. So here it comes, the three basic forms of business ownerships. The first one is sole proprietorship, the second one is a partnership, and a third one is a corporation. I will discuss the differences between all these three forms of business ownerships in the upcoming slides one by one. So let's start with the first one, which is sole proprietorship. Viewers, when we talk about sole proprietorship, it means that it is a business which is owned and operated by one person. When it comes to advantages of a sole proprietorship, so we have many advantages, such as it is very easy and inexpensive to create. Unless you need certification or local permits, government intervention is minimal. The second advantage of a sole proprietorship is owner makes all business decisions and has control over all aspects of the business. The third advantage of a sole proprietorship is its flexibility. Flexibility in scheduling to meet owners' needs. The fourth advantage of a sole proprietorship is that owner receives all profits. There is no one beside owner who will ask to share the profit, since in a sole proprietorship there is a single owner, so whatever profit comes, it will belong to the owner itself. The next advantage is about the privacy. The owner is the only one who knows details of the business, such as the secret ideas, the formulas, or the recipes. In addition to it, the owner has the ability to act quickly in making decisions, and there is no checking with others. When it comes to the tax advantage, so business itself pays no taxes. Taxes are paid as a personal income of the owner, which is usually lower than corporate taxes. Many business expenses are deductible, and the most important thing is it is very easy to close or dissolve the sole proprietorship. The sole proprietorship will have to pay employees and creditors, and a sole proprietor can sell the equipment or whatever assets the business is having in case if it wants to close or dissolve the business. The sole proprietor will have to notify customers if it is possible before closing or dissolving their business. The disadvantages of sole proprietorships: owner has unlimited liability for all debts and actions of the business, meaning in case of a loss, the owner is responsible to pay to its creditors. Doesn't matter whether the owner will have to sell the personal assets, since the personal assets will be used in the payment of the creditors. So therefore we can say that liability in this type of ownership is unlimited, or this is the concept which is called as a unlimited liability, meaning the debts of the business may be paid from the personal assets of the owner. If the owner cannot pay business debts with business income, the bill collectors can take owner's personal assets such as home, car, or any other property. The another disadvantage of a sole proprietorship is difficulty to raise capital because banks and the lenders consider sole proprietorship as a very high risk investment, and needs include paying employees, purchasing equipment and inventory, and running the business. For all these types of needs, money is required. For a single owner, it is very difficult to raise capital. Similarly, the expansions can be delayed or halted, causing the owner to lose business to their competitors. In addition to it, sole proprietorship is limited by his or her skills and abilities. A single person cannot be considered as a master in all the fields. For example, if somebody is good in finance but not good in marketing, if somebody is good in marketing but not good in terms of administration, so sole proprietorship is limited by his or her skills and abilities. The main disadvantage of a sole proprietorship is uncertainty about life. We all know the average life, let's say if it is 60 years, so in case of death of the owner, the sole proprietorship stands cancelled. So illness or injury that prevents the owner from working may cause the business to close. In case of bankruptcy or incarceration, it will dissolve owner's business. The death of the owner automatically dissolves the business. So these are the disadvantages of sole proprietorships. The next ownership type is partnership. When we talk about partnership, so it is a form of business ownership in which two or more people share the assets, liabilities, and profits. Sole proprietorship, as we have discussed, that there is a problem of a limited funds and there is a difficulty to raise funds, but in case of partnership, this restriction one can address to some extent. So advantages of partnerships, the first one is fairly easy and inexpensive to start. Since it is easy and inexpensive to start, so the partnership may pay attorney if the partners wants to develop a partnership agreement. The resources are combined, there will be a team with partners with different skills, experience, contacts, and capital. Sharing responsibilities makes a business run more efficiently and smoothly, because if there are partners who have specializations in different fields, so they can share their responsibilities accordingly to make a business run more efficiently and smoothly. When it comes to combined resources, it will increase the amount of capital to run the business. Lenders may be more willing to lend or extend credit to partnership businesses. Decrease competition. Combining like businesses will decrease or eliminate competition in the market. We have few more advantages of partnerships. Reduced expenses. When two or more businesses combine, expenses are no longer being duplicated. For example, promotion, office space, supplies, and utilities. Business losses are shared by all partners. The partnership does not pay income tax on profits. Each partner pays income tax on his or her individual share of the profit. So similarly, beside advantages, we have some disadvantages of partnerships. So let's have a look at them. Number one, like in the case of sole proprietorship, here also there is unlimited liability, meaning that each owner in a general partnership has unlimited liability when it comes to pay to the creditors. So the partners, they will have to sell their personal assets to pay to their creditors. So which leads to unlimited liability because the personal assets will be used for the serving of the creditors of a business. Each partner can lose personal assets to pay business debt. In a limited partnership, the liability is limited to the amount invested in the business. It is another kind of a partnership which is called as a limited partnership. In a limited partnership, the liability is limited to the amount invested in the business. Let's say if out of $10,000, if someone's share is $5,000, so the losses will be limited to the extent of the investment made by the partner in that business or partnership. The second disadvantage is about limited capital. Although partners may bring more capital to the business than sole proprietor, it is still limited to what each can contribute. Some lenders may still be reluctant to lend large amounts to partnership businesses. The next disadvantage is about difficulty in ending. Withdrawing can be complicated if there is no written partnership agreement. By law, profits must be divided equally if there is no agreement. Partnerships may lead to disagreements because if there are more than two partners, so not all partners are of equal mental approach. They have their own different opinions, so this may lead to disagreement. So this may lead to disagreement on business goals, finances, responsibilities, and division of profits. It can affect the efficiency of the business, the morale of employees, and success or failure of the venture. Developing a detailed partnership agreement often helps resolve the conflict because it addresses many issues that cause potential disagreements. Like in the case of sole proprietorship, here in partnership, the problem of uncertain life or transferability, it exists. Unless specified in a detailed partnership agreement, in case of bankruptcy, death, and the withdrawal or admittance of a new partner dissolves the partnership. Remaining partners may start a new partnership if they have the money to buy the former partner's share. So far we have discussed the advantages and disadvantages of sole proprietorship and partnership. And we have seen that the one common thing between them, between first two, sole proprietorship and a partnership, is limited life and unlimited liabilities. Meaning, when it comes to pay to creditors, the personal assets in case of sole proprietorship and the personal assets in case of partnership will have to be utilized when it comes to pay to the creditors of the business. So the third and final type is about corporation, a business that is chartered by a state and legally operates apart from its owners, owned by stockholders who have purchased units or shares of the company. A corporation is considered as an artificial person, like as we as a living person, we can have we have our name, we have our address, we can enter into a contract, we can sue someone, someone can sue us. Similarly, the same concept is applied on a corporation, but the corporation is not a real person. The corporation is an artificial person. So artificial person, since the person is artificial, so it can live as long as it is in the profit. So artificial person or a corporation can own assets in its name. It can enter in a contract with another company or another corporation. It can sue other corporation or a company. It can be sued by the other corporation or the company, and the corporation can own assets in its name. So these corporations, the ownership is divided into small portions or small units which are called as shares. So the corporations are owned by stockholders or shareholders who have purchased units or shares of the company. We have different types of corporations. The first is called as a C corporation. The most common form of corporation, it protects the entrepreneur from being personally sued for the actions and debts of the corporation. So if this is the case, it is called as a C corporation. The second is non-profit corporation, legal entities that make money for reasons other than the owner's profit, called as a non-profit corporations. We have another type which is called as limited liability company or LLC. It is a form of business ownership that provides limited liability and tax advantages. So limited liability means that the owner or the shareholder in this business is responsible, or the maximum loss for the person in the business is the extent of investment. If a person has made an investment in the business, let's say $10, so the loss of a person will be limited to $10, and nobody can ask or claim loss which is more than $10 from that person. So that's why it is called as a concept of limited liability. So advantages of corporations. Corporations are large. There are many owners or shareholders. So therefore the first advantage is about the financial power. The corporation can raise money quickly by issuing shares of stock. Because it is closely regulated by the government, financial institutions are more willing to lend larger amounts of capital. And the concept of liability, the liability is limited. The owners or shareholders need not to sell their personal assets when it comes to pay the creditors of the company. Because since the liability is limited, so in case of loss, nobody will ask the loss amount to be compensated by the shareholders, which is more than their investment. Let's say if someone's investment is $50, so the person's loss will be up to the $50. Nobody will ask to pay if losses are $100,000 or $100 or $500. So the loss of a owner, it will be limited to the extent of his or her investment. So that's why this concept is called as limited liability. Owners are liable only up to the amount of their investment. Personal assets cannot be used to pay business debt. Unlimited life. We have seen in the first two cases of sole proprietorship and partnership, both of them were having a big disadvantage of limited life. But here, in the case of corporations, the life is unlimited. So a corporation may exist indefinitely as long as it is in profit. The death or withdrawal of an owner or stockholder does not affect the lifespan of the corporation. The people will come, people will go, but the corporation will remain, function, and will remain, it will work. So advantages we have discussed. We have some more advantages, like it is very easy to transfer ownership. If somebody who owns a share in the organization, if he or she wants to sell the ownership, so it is very simple. Ownership is simply transferred by selling a stock to someone else. New stock certificate is issued in the name of a new stockholder. No permission is required by others. The business can hire experts to professionally manage each aspect of the business, because large corporations, they have enough cash and they can afford experts to manage their each aspect of their business professionally, and this can result in a more efficiently run organization. Beside advantages, we have some disadvantages of corporations. So let's have a look about the disadvantages. The first disadvantage is difficulty in forming and operating. Legal assistance is needed to start a corporation, and lawyer fees can be very expensive. Must request approval from the state and register the articles of incorporation. Decisions about value and class of stock and shareholders voting right. So these are the disadvantages. Corporations are subject to more government regulations than partnerships or sole proprietorships. There are so many requirements from the government regulators on the corporations as compared to sole proprietorship or partnership types of businesses. Reporting and taxation requirements vary from state to state, from country to country. So corporations, they need to work under strict rules and regulations with different requirements of reporting and taxation, and it depends that which country the corporation is working, and within a country which state it is working, because in some countries state-wise rules and regulations, there are some variations. It required to keep detailed reports for stockholders to keep them informed of certain corporate transactions, meetings, and voting rights. Corporations, they cannot hide any information, and their accounts are public and should be publicly available to shareholders, so that shareholders will be able to make informed decisions and they would know about certain corporate transactions, meetings, and their voting rights. New charter must be approved if corporate activities change. The next disadvantage is about dual taxation. Dual taxation, like when corporate or corporation, when they make a profit, they will have to pay tax to the government, and later the same income is distributed to the shareholders as a dividend or a profit. When the dividend will become the income for the shareholder, again it will be taxed. So this is what the problem of dual taxation. Shareholders are taxed on the dividends they earn on their investments. Separate owners and managers. Because owners are different, management is different. So stockholders are not generally involved in the day-to-day operations of the corporation. Stockholders or shareholders form a board of directors to make decisions about the business, and managers carry out these decisions. Separation of ownership and management provides more opportunity for irregularities or misunderstanding between the management and the shareholders. So viewers, I hope you would have understood in this brief review that what are the main differences between a sole proprietorship, partnership, and a corporation types of businesses, including their advantages and disadvantages. So thank you very much for watching. New viewers are requested to like and share this video and subscribe Finance Specialist channel by clicking on subscribe button at the right bottom of this video and hitting the bell icon to get the intimation of upcoming useful videos. You can share your thoughts, suggestions in the comment section. Stay blessed. Thank you. Thank you very much.